The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We hopefully are going to have as our guest today Joe DiNapoli, one of my very, very oldest friends, going back to the early 70s at Conti Commodities. He was one of the guys who used to be in the bullpen all the time. He was an engineer and got involved with Fibonacci. I think I gave him the very first proportional divider. And we've been friends for many years. We started the show like we always do, is with the German DAX and also the FTSE. As you can see, the German DAX has started to accelerate to the downside, much more so than the FTSE, but they're both heading down, and that's the key. Folks, today is Mercury retrograde. That's usually when the astrologers say don't make any big decisions at that time. I know that when you look at it on the charts, you'll see Mercury retrograde as a really good turning point, and it is because it's a smaller planet, closest to the sun, and you'll notice that it has an 88-day cycle, 1 day off of a Fibonacci cycle. And it does have some really strong points of astrology. And since we're talking about the astro, Mr. Z was kind enough to send us a nice picture here of what was happening here with silver. And I want you to take a look at it because we have a silver at apogee today. And I think it's going to be real interesting because we broke about $1.50. We broke about $1.70 into that. So this should be really strong support here in the silver if it's going to hold. Let me just give you a little bird's eye view of how I got started in this astrology stuff. When I started at Drexel in August of 76, I don't remember what year it was. I think it was 77 or 78. A woman came into the office. She was about 55 years old. Her name was Mary Rivers, and she told me she could trade silver by using astrology, but she didn't have any money, and if I could help her, and I said, look, I'll open up an account for $5,000. I said, we'll share the profits, and if there's any losses, I'll take the losses. And she says, that sounds like a good idea. How does this work? She said, well, I'll call you up, and I'll tell you to buy the silver like at 7:16 in the morning, and then I don't use stops. Don't worry about that because I don't lose. And I said, oh boy. I said, I know how this works. I was saying to myself. So I did that, and sure enough, she would give me a call at whatever time it was going to be, and the market. She just started working all the time. I mean, it was just amazing. The very first order I remember, because she said, "I want to buy December." I forget the month. It doesn't make any difference. But he said, "I want to buy December silver at 7:16 in the morning." And so I picked up the phone. I called Goldberg Brothers in New York. That's where Drexel cleared all their silver and gold trades and copper. And I told the young Richie Goldberg, I said, Richie, I want to buy the December silver at 10:16. And he says, what are you talking about, 10:16? He says, it's trading for 5 1/4. And I said, no, I want to buy it at 10:16 in the morning. Oh, and he says, what? He says, do you want to buy it at 10:16 in 1 second or 10:16 in 60 seconds? I said, Richie, I just want to buy it at 10:16 in the morning. He said, okay, we'll use a DRT order, which means disregard time. So she bought it. 2 days later, it went up. And well, she was right about 19 times in a row, but there was a big bias here. Basically, what she was doing is she was buying silver whenever it went into the sign of Scorpio, as I recall. In other words, when silver moved into the sign of Scorpio, which stayed there for 2.5 days, she would buy it and she would sell it when it came out of Scorpio. So that was the reasoning for the time. Well, we had made quite a bit of money. We made about $5,000 over a period of about the next year or so, and she disappeared one day. She just disappeared. And I think what happened was she was doing this over at Dean Witter over in Santa Monica, and they had a bullpen over there, much like Conti Commodity had. And I think someone made her a better offer, and I never heard from her again. I had a Don Polk, who was one of my customers, was a private detective, and he tried to track her down, and we never did find her. And she just flat out disappeared. So we didn't know what to do, and so Jimmy had the right idea. He said, well, if it's a time thing, all we have to do is look at the Astro times of what was going at that time, and we'll go back and reconstruct it. So we went down with our buddy Neil Michelson, and he came back with the data, and Jimmy looked at it, and he said, oh, she was buying when it went into the sign of Scorpio, and when it came out, she was selling. And then we started to test it. And, of course, remember, silver's going straight up from 1974 through till January of 1980. It was really heavily biased. Now, if you would run that sequence now, you'd be looking at something that probably, the last time we checked it, which was probably 15 years ago, it was running at about 65%. Correct. But there's no stops involved, because sometimes there'd be huge moves in here, like silver moves $1.50 yesterday. If you're long there and you're waiting for it to get back up, good luck with that one. But that's how she did it. But it was during a time when it was going up, and so it worked during that time. That's basically what we're watching here. The reason why I bring this up is the fact that we do have Mercury retrograde in here, and Mercury retrograde is a really big one, folks. And we've had Norm Winsky on here several times over the years, and he's called some major tops. The May 15th top of several years ago, I think it was in 2015 or 16, and a few others, and they were based on this Mercury retrograde. And we have Mercury retrograde going right now, and of course we have the new moon coming up here, on just a couple more days here on Friday. So we're in the zone of that because the apogee starts today and it goes out into the 16th. So you've got apogee and the new moon coming in on the 16th. So we're going to have some really wild times. Folks, October 16th means a great deal because that's when the market broke. In 1987, the market was down 104 Dow points when the Dow was trading at around 26,500, something like that. It was down. That was a lot. It really was. And so it was down 104 points. I happened to have the puts on that day, and I was happier than a chicken out of the barnyard. And by golly, if I'd have had November puts instead of October puts, it would have been to the tune of about $2.5 million. But I was happy. I had no complaints, and it was a great day. We had a big party up there in Paso Robles for Malcolm Smith's daughter. He was Merrill Lynch, Pierce, Fenner, and Smith. And then on Sunday, the 18th, Eddie Horowitz got married down at the Bel Air Country Club. And so it was a big party weekend. And then Sunday night, when I was driving back, I found out what the markets were doing. And I said, holy moly, guacamole, what's going to happen Monday? And the rest was history. It happened to be the best buying opportunity of the 1980s, folks, because it stopped exactly at the 61% retracement in the Dow Jones at 1666, I believe was the number, as I recall, and it never looked back till it got to September of this year, and we're probably going to take that one out too, somewhere above 29,000. Okay, we're going to take a look here at some of these other markets as we go through. We have to look at the S&P because we finally have a signal that may mean something in the S&P.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted a 15-minute chart of the S&P. This was a video that I did when it was making the bottom down here yesterday, and then I was expecting it to get up to that level of 53.20, 35.20, and we got to 35.21. That completed a, you can see that sloping downtrend. That's a 135 pattern. Has some pretty nice symmetry. The fib numbers are just spot on. And so if you did that one, put your stop at break even, because if it gets back above that 35.21 again, it's most probably going to go higher. And we're over some major cycle stuff, so anything can happen. And the NASDAQ is still, still by far the strongest. So we might have Mr. Joe DiNapoli on the line now. Is he in the house? Maybe so, maybe not. Well, we'll try to get him on here. It looks like we got connection, but it's not coming through yet. Well, hopefully we'll have him on, because he's got some great stuff. He's a really smart guy. Let me hold on here. They're going to not quite yet. So we'll be getting it ready. I've got his charts all ready to go. So, and he's got some real interesting charts. So I think you're going to enjoy that quite a bit here, Sue, as we look at some of these things here today. Hold it there. Keep measuring me here. No, there's no way that I can message him at all. I don't have his phone number. I have his email, but that's so slow that doesn't really count. Just keep trying, Al, and we'll get him on the line. And then once we get him used to using Skype and stuff, we'll be able to get him on here without using too much. I believe, I've known Joe so long. I believe he was an engineer as near as I can tell. But that's been so long ago, I can't even remember that. That's the the bad part of this is that I can't remember the stuff that I have. But he's got some really cool looking charts here, which I think that we'll enjoy having here. Hopefully, when I get these things set up. And there's what we got here. Let's see if we can get this up here. Here, I'll just put the first one up, and then when Joe comes up, we'll be able to talk about it. This is the one that reminds me of the Wyckoff stuff. And believe me, I remember Joe was during that time when we were going down to the Investment Center bookstore where Don Mack was, and we would look at a lot of different books. But this is a reminiscence of a Wyckoff chart with the ABCD patterns and things, which is the real structure of how the market works. But I am not going to do any more of these charts until Joe comes on, and then we'll be able to look. I'll continue talking about these markets because they're important, folks. The key level today is the 35.21. Mr. DiNapoli, are you in the house?
Hello, hello.
Hey, how you doing, partner?
Can you hear me, Larry?
Yes, sir. You're coming in perfect. Come on,
really? I hate, listening to shows where I can't hear people because I just about lost my hearing. So I want people to be able to hear me. So you think I'm okay?
You're coming in just absolutely perfectly, my friend. Yep, just absolutely perfectly.
You got a velvet voice. I haven't heard you on radio before. You sound like a real pro.
Oh yeah, that's me. Me and Johnny Carson. Yeah, look, you're gonna get your big check, so don't worry about that, folks. Right. I met Joe back in 1970 when we first moved to the Conti Commodity Building. You're an engineer, aren't you? Weren't you an engineer, Joe?
Yeah, electrical engineering, and that was real helpful to me to understand what was going on in the market.
Yeah. Wow. Well, listen, we got plenty of time here, so we've got this chart up here about market structure. Do you want to start with that one?
Yeah. Let me see if I can find it on my own computer. We're all victims of technology. So anyway, yeah, I'm looking at the market structure. Look, what I want to talk about today is not how terrific my trading system is or how much money I make or anything like that. I don't care. What I want to talk about is what people are actually up against when they trade in today's markets. And there's been a sea change. Markets were essentially similar from the 1800s until March of 2009. And when March of 2009 occurred, we had a change in market structure. And what I'm talking about is that Skynet took over. We have computer algorithms that are now controlling the markets. And markets, it really is different this time. And people better listen and people better watch out, because what they were up against in the 1800s, 1900s, and up to March of 2009 is not what they're up against today. Things have changed. So this first chart is showing you how it used to be. And it's showing a pyramid, and it's showing a building. And the building of this pyramid has to do with time frames in the markets. Can I go on, Larry?
Yeah, you've got the whole time, and you've got my interest, and that's not easy to do. so go right ahead.
If I got your interest, I'm happy, because when we talked, what was it, a week ago? First time we talked in 15 years. I said I wanted to mention this to you, but I said let's save it for the radio show, because let's keep it fresh. Maybe you agree, maybe you don't agree, but bottom line here is that if you've got plumbers and auto mechanics and you've got construction people out there, they're going to understand this. But if you've got people out there only working with their heads, they don't understand structure, then they're going to have a little bit of a problem. But what happens here is that you've got different time frames. Now, the time frames I've got pictured on this pyramid are time frames which the computer algos depend on. And there's a couple I don't have on here. But basically what's happening is that if you're a 1 minute trader, you're depending upon the liquidity that happens in the second time frame. If you're a 5 minute trader, you're depending upon liquidity that's occurring on the 1 minute time frame. If you're a 20-minute trader, you're dependent upon the 5-minute time frame. 30-minute trader on the 20-minute time frame. So what you're doing is, as you go up this pyramid, the weekly players are depending upon the daily players. If there's no liquidity in the daily players, the weekly players are SOL. Then you know what that means.
Yes, sir.
Same thing with monthly players. All right, so this is the way the market used to work, and of course there were dislocations, there was high volatility. You had situations like August of 1987 where things fell apart. But today, let's go to the second chart. You're going to see a pyramid doesn't look like a pyramid anymore. You're going to see a pyramid that sort of looks like a diamond. Mm-hmm. And what's happening here is that the computers, the algos, have literally destroyed the lower time frame traders. I mean, they ain't there. So you have very few traders down in the 1 minute world and now in the 5 minute world. So therefore, the people that are in the 20-minute world and the 30-minute world, they cannot depend upon the liquidity that used to be there from the 1800s until March of 2009. And nobody seems to get the message that this is the reason why we're having the excess volatility.
Wow. Hey, Joe, stay with us. We have to pay a few bills. It'll take us about 3 minutes, and we'll have you back on for the long segment. Joe DiNapoli, folks, Coast Investment Software. We'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. We're talking with Joe DiNapoli, Coast Investment Software, and Joe and I have been friends for 49 or 50 years, and we have a couple of notices here. Joe, one is from our fearless leader, Tom O'Brien Sr., said to say hello to you. He's an old friend of yours, and there's been 2 or 3 other people here in the den that have worked with you, and they speak very highly of you here in the den, so you've got a great reputation. So, hey, Joe, I'm just going back memory lane at just a second, for just a second. Do you remember Jay Cross? Remember how he used to talk about displaced moving averages, and you were using those for some time. Did you ever use those anymore, Joe?
Well, I'm going to tell you a secret since we're walking down memory lane here. First of all, Tommy, he's the best. I mean, I still remember having dinner at his house, 40 years, 30 years, 20 years ago, and patting his big German shepherds and eating some delicious steak. He's a great guy. So, I wish him the best. And the 2 of you, how long have we been together? Jay Croft, Jay Croft, and there was one other individual, you were actually my mentors. Now, by being a mentor doesn't mean that you sat with me for, 3 years and taught me how to trade. What that means is that no, really. What that means is you flash the flashlight in the right direction. Jay did, you did. I still remember I went up there and saw you in someplace in California, and you actually introduced me to the very basics of expansion analysis and retracement analysis, from which I developed an entire trading system. Jay taught me about displaced moving averages. I didn't spend more than 10 minutes with Jay. Yeah. But to answer your question, yes, I still use them. And if somebody throws up a 25 by 5, it's 25-day simple moving average at the close, displaced forward 5 days, they're going to find out that this thing really held the S&P futures markets. It's just amazing. And the 3 by 3 is the basis. The 3-day simple moving average displaced forward 3 days is the basis for a lot of my patterns that are in my book, in chapter 6 of my book, Trading with the Napoli Levels. So this, to answer your question, yes. And to this day, I am grateful to both him and of course to you for shining that light in the right direction. There was a third person who, again, I spent about 2 or 3 hours with him, but you guys were the 3 people that got me started in the right direction. Before that, I was in a closet and I was banging around trying to figure out what direction to go.
Well, you came out of the closet pretty good, to say to speak.
Yeah, well, for your listeners, I've been trading the S&P futures contract since the day it came out in '82. And I've been trading the Value Line Index, which came out a couple of months before that. I am a very experienced, and I trade hundreds of these things. I'm a very experienced S&P trader. And the reason I'm talking about market structure instead of, my leading indicators, which are deadly to trade this thing, is because the market's changed. People really need to understand that the market's changed, and there's a way to make a lot of money from this. But it's not from a traditional moving average. I mean, if you think you're going to make money trading a 200-day moving average, God help you, it's just not going to happen.
Okay, makes good sense. That's for sure.
Can I get back to this market structure issue?
Yeah, we're here. Go ahead.
Let's talk about plumbing. If you got a 3/4 inch feed line coming into your house, you're going to have a nice water supply and you can take a shower. If it's an 1/8 inch, it's not going to work. If you've got 2x4 floor joists, you're going to be able to walk on your floor without let's do that again. 2x10 floor joists, you're going to be able to walk on your floor without bouncing. If they're 2x4s, it's not going to work very well. The situation with the market now is that the lower time frames have been hoarded out by these computer and algorithmic trading, and it's causing this tremendous excess volatility. There are some estimates that in certain stocks, 90% of the volume is computer generated. Market structure is unstable today, and that's why you've got a situation. It's not COVID, okay? COVID is just an incident that happened, and it's awful and all that. But I don't mean to downplay it. But That's not why we dropped 40% in a matter of a couple of weeks. What happened was that we have a weak market structure. We've got 2x4s for floor joists, and the market can no longer handle a situation like COVID. And that's why you're getting the kind of volatility. You have got basically a situation here where there are literally predatory algorithms that are set loose in the market intraday, which move these markets around and which can crack a market. I mean, imagine for a second that you're a large trader, and I'm talking serious thousands of contracts, S&P contracts. The market's going up, market's against you. We're clearly moving up. He's short. Okay, so what's he going to do? He cannot buy at the market. It is impossible. It's going to go to infinity. He's going to get killed. So what he does is flip a switch. He sets a predatory algorithm off, and what this predatory algorithm does is it seeks a sell signal. Now, the sell signal it will typically seek is what I call an MACD predictor. I don't know if that's on any of my charts, but basically it is a predictive leading indicator that I've developed, which is a derivative of the MACD. And what this algo does is it searches to create a sell signal. When this thing creates a sell signal, sell, 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 and you're going to see the market crash through it. And the minute the market crashes through it, the algo sense that we've penetrated this, and what they do is they sell, and they sell in size. And that gives the opportunity for the trader who was short to absorb those sells and now get flat or get long the market. This is going on all the time. People don't realize it. The market goes down there. It has a thrust bar down at a 0.382 retracement back up. There is selling, allowing the large trader that's short to get flat or get even, goes across a little bit, and then there's an MACD predictor buy signal on a 5-minute chart. The market goes back up right to where it was before, and the public has been literally screwed, and some of these algos have been screwed along the way. This is the way the markets are working these days. Yuri from Russia has taken over our financial system, and I don't think that it's a good idea. And that's why when I'm given a microphone, and thank you so much, Larry, for giving me this microphone, I want to talk about what's really going on in the markets, because a lot of people just don't realize it. You listen to CNBC, and they talk about, oh, the market's so terrific. It was able to absorb the selling from COVID. Yeah, it absorbed the selling from COVID 40% down in 3 weeks. This isn't absorbing. Just because there was a trade, 40% down doesn't mean the market's working. The market is broken. The market is broken. Now, we can take advantage of the fact that the market's broken, but the vast majority of people that aren't using leading indicators like Fibonacci, they don't know what they can't interact with this market. The volatility is just way too high.
Joe, we got to pay a few more bills. We got two minutes of ads, and then we'll be right back with the segment that goes to the end. How's that?
Sounds good.
Joe DiNapoli, folks, Coast Investment Software.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, with Joe DiNapoli, Coast Investment Software. You want to continue, my friend?
Yeah, let's look at the third chart. That has to do with the market structure that existed, for hundreds of years, where you have a down move, you have a basing pattern, you have a test of the lows, and then the market moves up. This is what we have been used to in the past. Today, go to the fourth chart. What you've got is a very unstable and high-risk V-bottom. Now, V-bottoms have occurred all through history, but they have not occurred, every couple of weeks. I mean, we've got a market structure now which is almost untradeable for most traders, and those are these sharp V-bottoms. The next chart that you can see, if I can get it up here, is the weekly S&P chart around December of 2019 showing a V-bottom. And these V-bottoms are extremely powerful patterns. I talk about how to trade them in Chapter 6 of Trading with DiNapoli Levels, but that's really not the point. The point is that these things are occurring all the time. And the reason that they're occurring all the time is because of the low time frame lack of liquidity. What we've got on chart number 6, if I can get it up, I'm looking at it too, is this is a monthly chart of the S&P E-mini futures, and again, we dropped like 40% in a matter of a couple of weeks, and then we go into this V-bottom situation. These are unstable, very difficult to trade markets. And without making this all, a horror show talking about how you cannot trade these markets, well, you can, but you have to trade them differently than you would have traded them in the year 2000 or the year 2005 or 1987. You just cannot trade these things the same way. You must have the ability to get leading indicators on your charts. And nobody teaches leading indicators. I mean, I know you do, Larry. I do. That's my whole thing is leading indicators. MACD predictor, oscillator predictor, DiNapoli levels. If you don't have this kind of tool, you're basically screwed because the markets are too fast. I use the best trading software on earth. It is quantity quote graphic, expensive, but very, very good. When I'm trading the NASDAQ futures contract, Larry, I'm looking at the depth of market, right? And I have on a 5-minute chart, I've just completed an expansion up to a COP. In other words, I know where I want to put my sell order in because we're heading up to a COP. I've got my mouse, right? And I have a wheel on my mouse. And I am spinning it as fast as my finger will go. And by the time I spin that thing up to where the COP is, where I want to be a seller, the market can hit there and move away before I can actually get an order placed. And I mean, I'm talking seconds, but that's just too fast. Markets have changed, and that is the main thing that I'm trying to point out, and it's not a good thing. Lee Cooperman, famous hedge fund manager, has talked about this, and Lee Cooperman has tried to make some changes. He wants the uptick rule reinstituted, and there are some other changes that we could make to stop these phony orders that the large traders put in, and spoofed orders. There's a lot of changes that could be made to make this market far more stable, far more accommodating to the average trader, and not just good for guys like you and me. But these changes aren't happening. There's just too much money into letting these algos have their own way. But my prediction is that this market's going to have a dislocation one of these days. And this dislocation is going to be very serious, like several limit down days. And then finally, somebody's going to do something about the way these computers are interacting with markets.
That makes good sense, and I believe that 100%. There's going to be some really drastic changes made on what's been happening with some of these things. So, I agree with you. But I think after it's all over, we'll probably go back to something that has been working for 150 years. But I have to agree with you here, Joe. We've never seen anything like this. These markets move, they move 1% in a heartbeat without even having a heartbeat. That's for sure. And it's not just the indices. You're seeing it in gold, crude oil, and natural gas, and treasury bonds. I mean, a lot of these are just going absolutely ballistic. And we have a question from one of our listeners, Joe. What effect do you think the Federal Reserve is having on this? We hear a lot about the amount of money they're putting in. Do you look at that at all as far as a parameter?
Well, it's a fundamental event like COVID. You have these fundamental issues happening all the time. And, right now we got the stimulus thing that may or may not happen prior to the election. The election is going to be a major event. And if we have time, I can talk about that. But it's just the Federal Reserve, obviously, it's moving the market, but it is simply a fundamental event. It shows up in the indicators that we use, and it drives the markets to certain levels upon which we can act. So it's just another event that we have to interact with. The point is that instead of it taking 6 days for the market to reach an objective because of what the Federal Reserve does, it takes 6 minutes. And, the average guy can't cope with this. Even if they've got a 401k, and they look at their 401k. I remember talking to a guy in Thailand, but for your listeners, I live in Asia, not now, but I lived in Asia normally. And I remember talking to a guy over a cup of coffee, and it was right at the bottom of the market in 2018, in December, near Christmas time, and he was getting rid of everything. And I said, dude, we're in an XOP. We're at an expansion point, but this is where you're going to be buying, not selling. He said, I can't take it. He said, every time I open my statement, I cannot take it any longer. I have got to get out of this thing for my mental health. And I said, well, okay, you get out. And this is happening to tens of thousands of people because they can't handle the volatility. They don't know how to interact with it. And if we have a few minutes, I'd love to give your listeners just a minute.
Well, we've got 2 minutes here, and then we got 2 minutes after the next break. But you let the cat out of the bag when you said election, so you better tell us right now what you're thinking about in the election, because I already have 3 people pinging me to say, please say more about the election. So can you talk to us about what you're thinking about here in the election?
Yeah, try to leave me enough time, though, because people that are on a long-term time frame, they need to know how to buy stocks right and sell stocks right. And I'm going to try to give that little bit of information. With regard to elections, yeah, I can talk a little bit about elections, and I don't want to piss off half the country because, I think one or another person is is the best person to vote for. So I just want to talk about the economy, and I just want to talk about markets.
Let's do that.
There's a lot of reasons to vote for president, lots of reasons besides the economy and markets, but my expertise is economy and markets. So there's the disclaimer. I love China. I work in China, okay? China is a competitor like you cannot believe. If anybody out there has any doubt, we are in a knockdown, drag-out competitive situation with China. They are the smartest, most hardworking people, and if we don't get our you-know-what together, we're done for. Yep. So, here's
Joe,
the bottom line.
We have one more commercial for 4 minutes, and then you got the last 5 minutes, okay?
All right.
Joe?
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Joe DiNapoli, Coast Investment Software. Joe, I've already got more requests here for you to be on the show than me. They want me to retire and you take over the show. Can you come on again next week?
I would love to.
Just pick a day and we'll work it out. But go ahead and continue, and we'll have you on again. It's just got so much information we can't cover it in 45 minutes, so we'll have you on again And hopefully as a regular.
On next week, it's all going to depend on where my positions are in the market. I trade every single day, and I'm 90% sure we can do something. But I just want to give that one possibility that sometimes it's impossible.
Yeah. What time frame, Joe? One of the questions is, what time frame do you trade when you're trading intraday?
Well, I'll trade all time frames from 1 minute all the way up to hourly intraday. And basically what that means is when you trade, you need a context time frame upon which you use your leading indicator, like Fibonacci or oscillator predictor or whatever. And so, I get my context, let's say from a 30 or a 60-minute chart, and then I'll do my entries on 1, 3, or 5s. It depends on the day, it depends on the activity, depends on the volatility.
Okay.
So that's the answer to that question. Can we get back to China? Because China is the most obvious play with this election.
I'm ready for it. Go ahead.
All right. I have to impress on people, since I've been working over there 15 years, presenting over there for 15 years, what we're up against. And I'm not talking about China cheating or any of that. I'm just talking about a flat-out competitive situation with China. They have a more efficient system of government. They have a mixture of capitalism and top-down. I mean, these people they have their you-know-what together. And here we are in America. We're divided amongst ourselves. We're arguing amongst ourselves. It's all about political stagnation and impeachments and all this stuff. And we do not have our eye on the ball.
Well, listen, we're going to have you on next week. Just keep in touch with me. Tell me when you want to be on. And thanks for being with us, buddy. We got to do this more than once every 15 years for sure.
I love you. I love you, Larry.
Keep the faith, brother. Tell Peppermint Patty I said hi. We'll be back, folks, tomorrow.
Wait for Tom. Is that it?